Hi folks, Dan Bird here with the daily scan for June 11th. I just want to do a quick update because I am seeing some things here after today's action that I wanted to bring to everybody's attention, just so that everyone is aware. So this is not going to take too long tonight. As always, I am not a financial planner, so this is for educational purposes only. On the home page, the market bias chart continues to go higher. However, let me show you a few things. First, we'll look at the S&P, and you can see that after starting off nicely in the morning, we pulled back in the afternoon, and pretty much everything was pulling back this afternoon. Let's zoom in a little bit on this, and let's look at 5 months. And what you'll notice here is, or what I noticed anyway, is as the market makes a higher high right here, you can see the pullback today. It's not too serious yet because it's just right at the 5-day EMA. But as the market is making new highs, the RSI, or momentum, looks like it's making new lows. Now, this is just beginning. So this is why I wanted to bring it to your attention, because it has just actually started. So this could negate this pattern if the market continues to go higher and this goes higher with it. In other words, if this makes new highs on price and then the RSI also makes new highs, then it negates this pattern. So it's only at the very, very beginnings of this. So it's not confirmed yet, but I wanted to bring it to your attention because it's one of many things that I'm starting to see. So that is a negative divergence right there. So I just wanted to show that to everybody. The other one, which actually a subscriber pointed out, and I didn't show it previously, but I want to show it now. If we go to the website, breakpointtrading.net, for those that are subscribers, I'm going to go to the charts page, and we'll go down here to the daily routine. And first we'll look at the big picture, S&P 500 right here. All right, so you can see this is a bearish wedge. It's a very long bearish wedge right here, all the way back from 23 until everything topped out right here. But bearish wedges typically break to the downside, and this one did, although it took a long time for that to happen. However, notice right over here where we are right now. I'm going to zoom in on this, bring it into 6 months. There is another bearish wedge, and we are right at the very tip of that wedge right now. We theoretically could go 1 or 2 more days, maybe till Friday. We did have good volume today, but it actually was on the downside, even though the bar is positive. But keep an eye on this one as well. So that's 2 things now that I'm noticing. Got a bearish wedge that might break to the down. They usually break to the downside, but doesn't mean that it has to. But if it does, it should be within the next day or 2, maybe even tomorrow. So we had good CPI, good inflation numbers today, but sometimes it's, buy the news, buy the rumor, sell the news, and maybe that's what we're going to get. We shall see soon. I noticed lots of other things were giving back their gains today as well. So move your stops up, be careful, take profits if you can. That would be something that would be wise to do. Just looks like to me that this market is starting to get tired and might roll over. Doesn't mean it's going to crash. So it's still got good support down here at the 21, support at the 200, down here at 5,800. So it does not mean it's going to crash, but could come down before it makes another run at the high. The last thing I want to show you is that I noticed today also as I was updating this, on the homepage, I have right here the new Dow theory. So this actually, for non-subscribers, this will take you to the chart of the old Dow theory, and it explains what Dow theory is. And it basically is Charles Dow back basically 125 years ago said if the industrials are going up, then the transportation should also be going up. And that made sense back in 1900. If the industrials, the people that make the products, is going higher, then people that are shipping the product should also be going higher. But take a look. You can just barely see it here. Take a look at what these look like. So today we've got a spinning top. It went up and came back down. However, on transportation, it sold off just all day long. So that is another negative divergence. Not only that, we've got a higher high on the industrials, but we did not get a higher high on the transportation. So that is another bearish divergence. Now, what I've also added here, and thanks to David Keller from Stock Charts, he's the one that suggested this one, equal weight NASDAQ to equal weight S&P. And then I added two other ones to kind of reflect the new economy, because we're not running just on trains and industrials anymore. So this is equal weighted NASDAQ 100 versus equal weighted S&P. And the arrows you see here is what happened back in February, where the equal weighted NASDAQ was going higher, but the equal weighted S&P was going lower. That was a negative divergence. So what do we have right now? Well, we have equal weighted NASDAQ going higher, but equal weighted S&P not going higher. It's at best, it's equal, and I would say it's actually a little bit lower. So that is another negative divergence. If we look at the NASDAQ 100 to semiconductors, you can see they look like they're kind of going in sync with each other, which is good for the digital economy. And then finally, communication services with internet, and communication services and internet are also moving higher together. So those aren't flashing any warning signs right now, but there are a couple of other ones that I just noticed. And I wanted to bring it to everybody's attention today. That's something that I'm seeing. So be careful. The market may be getting close to a top, which actually would be healthy. Be healthy for it to have a nice pullback and then make a run for the all-time highs. Now we're going into the weakest part of June. We have the 20th is options expiration. So that's a week from Friday. We've got, usually it will be a bearish week next week. So max pain, I will show you that on Monday. Let's look at everything else over here. If we look at the 10-minute charts that I showed at the midday report, you can now see that they have continued to go down. So there's the aggressive sectors, the defensive sectors, and most importantly, the rotation. So rotation, growth versus value going lower, discretionary versus staples going lower, technology and semis are hanging in there, but internet is going lower as well. So again, one more piece of data showing that the market may be getting ready to roll over. If we look at the McClellan oscillator, which essentially is a moving average of the advanced decline lines, you can see right here, it went below zero right there, and now it's trying to get back up, but it hasn't really got back up past this 20% line right there yet. And bullish percent index is starting to come down too. That's also a negative divergence. So divergences is when the price does one thing and some other indicator does something opposite. So we've got price going higher, but bullish percent index going lower. So all of these things are divergences. They're just beginning to appear, and things that we need to pay attention to. Let's look at it 50 and 200 day. You can see here the percentage of stocks above the 20 as the market goes higher. It's going lower. Percentage over the 50, just slightly lower, but the market's going higher. And the same thing for the 200. So again, there's some more bearish divergences. Again, it doesn't mean the market's going to crash. It just means that it's getting tired. It's running out of momentum, running out of buyers, basically. So at this point, this is usually when either the market goes down with price, or it just goes sideways, and time itself will catch up with it. But just something that I wanted to alert everybody to, let you know that something that I'm seeing, because these things have really been appearing, especially today, as we hit new highs and then pull back. So I wanted to let everybody know what it looks like. Hopefully that was useful. Let me know if you have any questions, anything you want me to look at. Be happy to do that. And I will talk to you tomorrow at the midday report. Take care.